I know the markets are actually arguably the worst I've ever seen since I've been in the space. I mean, I was here for the COVID crash. I was here for the crash of May of 2021. We had the FTX debacle. We had the tariff scare earlier this year. And this one that we are experiencing and we've been experiencing over the last 6 weeks has been absolutely brutal. I mean, it was not that long ago. It seems like a distant memory that, October 6th, we were at Bitcoin all-time highs, just over $126,000. Into September, Solana was at $250. Of course, October 10th then came, and we saw the biggest liquidation event in the history of crypto. And I think the hard part, as opposed to something like FTX, and I was talking to Tyler with Unleashing Deepin about this, is at least with FTX, we knew why. We knew what caused the issue. This time around, we knew something broke, but it wasn't really until recently that we knew exactly what had taken place. And that's what I want to lead off with here. We've seen this video circulating a lot over the last couple of days with Tom Lee of Bitmine, of course, the Ethereum digital asset treasury company. And I want to play a couple of clips from this, and then he's a little bit vague. I'm going to fill in the gaps for you all on the details he leaves out.
But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading. And if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. On a specific exchange, a stable coin's price varied from other exchanges. Stable coin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names.
Well, okay. This is the CEO of Wintermute, one of the largest market makers that works directly with Binance.
See a lot of, basically challenges from a lot of trading firms to a lot of exchanges in the coming days and maybe weeks. Because I can tell you, like for us, for example, some of the ADL fills we got were very strange.
So again, this ADL, this is essentially being liquidated or margin called if you're on leverage.
So it just didn't make sense for us. Like there were like some perpetual positions where we got ADL, like on Binance and some other platforms, and like, okay, it's fine to get ADL if you can hedge, but also like our challenge was like sometimes you'd get ADL to a completely ridiculous price. It just didn't make any sense.
So he calls out Binance by name here, says they got liquidated at prices that didn't make any sense. Of course, right after this too, Binance came out and launched this Together initiative out of the kindness of their heart. They're like, hey, we're going to give out $400 million to people that got liquidated in volatile times. Okay. When I first saw this, I was like, this is the most obvious admission of guilt I've ever seen. So what exactly happened? I think this article does a really good job to fill in the gaps here. This is what Tom Lee was talking about, USDE. Okay, so this is from Athena Labs, the stablecoin. It's designed to stay at $1. It crashed to 65 cents on Binance only. Unlike other exchanges, Binance uses its own internal order book. Essentially, the buy and sell orders on its platform to set prices for margin trading. This has created a problem when trading volume got thin. It says that their unified account system lets traders use different types of assets as collateral. It includes these yield-bearing tokens like USDE, the one that depegged. When these tokens lost value, the collateral backing traders' positions evaporated and they got liquidated. Here's where things get a little hairy, in my opinion. So on October 6th, again, this is the day that Bitcoin hit its all-time high, Binance announced plans to fix this exact problem. It said that the exchange would switch from using its own order book prices to more reliable external data sources. Of course, though, they said that this was scheduled for October 14th, so they didn't fix it right away. They announced that, hey, this is a potential exploit. We're going to fix it. But it left this 8-day window. Of course, within that 8-day window is when we saw October 10th take place in this black swan event. So this crypto journalist, Colin Woos, pointed out that the timing wasn't random. Between the announcement and the planned fix, attackers had a clear opportunity. Binance's risk team knew about the vulnerability but hadn't closed it yet. And I think this is weird. I find it very odd that if they knew this is a potentially massive vulnerability, why wouldn't you fix it and then announce it after the fact that it was fixed? Why would you announce that there's a vulnerability and then wait 8 days to then fix it and leave this window of opportunity for someone to come in and exploit it? The other thing here, and I think we all saw this, right? There's the whale in the room, the blockchain data. This person, whoever it is, went onto Hyperliquid, created brand new accounts on Hyperliquid, and opened up these massive shorts. We don't know if this is connected or not, but it does raise eyebrows, right? The trader doubled down on these bets 30 minutes before Trump's tariff announcement. They ended up making between 190 and $200 million in profit on Hyperliquid, shorting everything. Obviously, very suspicious. We don't know for sure whether this is connected with the attack here on Binance. But it does say Athena did defend itself here. Young, again, the founder, emphasized that USDE itself didn't fail. Okay, so the token's underlying system for creating and redeeming coins worked throughout the crash. About $2 billion in USDE was redeemed across platforms like Curve and Uniswap, and prices stayed within 0.3% of a dollar. Again, it was isolated to Binance because of this exploit. They made it known to the world, waited 8 days to fix it, and within that window, that's when this all happened. And of course, this caused the fallout across all of crypto, and we're still dealing with it today. Now, this is what Tom Lee closed with. I want to play this clip, and then I want to kind of put this into perspective of what this could mean moving forward.
In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi, where there is going to be code and there's going to be an error found, and you said it, leverage is what's dangerous.
Yeah, well, that doesn't help us now, and Tom Lee is feeling it too. I think they're like $5 or $6 billion in the negative right now. So I'm sure he is stressed. But I want to put this into perspective, and this is a bit sobering. So he mentioned there, the FTX fallout took 8 weeks to recover. Y'all, I mean, this was 9 times larger than any other prior event when it comes to liquidation events in crypto. So this is not something that's going to go away overnight. We knew it was a big thing when it happened. And I think we're going to still feel the effects from this for some time.